conversation forward with Angshu Mallick, Chief Executive Officer and Managing Director with Adani Wilmar. And joining him now in moments from now would be Mr. Rajeev Asthana, CEO of Ruchi Soya. Mr. Mallick, I'm going to start the discussion with you.
Good morning.
Have commodity prices come down, and because they've come down in the spot market, but have changes also happened in a proportionate manner when it comes to your long-term contracts?
See, normally in any commodity, we have seen that the prices, when it comes down, it doesn't come down at the same speed in the spot market. But yes, the spot market has responded very fast because overall expectation was that the prices are at higher level and it might come down. And we all expected that there would be some corrections. How much we were not sure, but yes, 15%, 10-15% correction, and that has happened in the spot market.
Give me an impact analysis of this. Will this be passed through to the consumer? Could this lead to inventory losses? What changes for the customer, stroke consumer, and what changes for the shareholders?
We have reduced the MRP, and we had announced that around a week back that we have reduced the MRP, and to some extent the trade prices also were reduced. However, as far as the inventory management is concerned, we have a rotation cycle of the inventory. So this inventory gets churned every 80 to 90 days. So on an average, if you see on a 90-day cycle, it doesn't impact so much on a day-to-day basis. Yes, as the prices keeps on going down, all the commodity players will also have to correct their prices. However, when you have a strong brand like Fortune, we have an advantage where the pass on is not so rapid and slowly, as consumers don't look at the daily market prices versus the daily MRP or consumer prices of Fortune. So to that extent, good brands have strong resilience towards drop in prices whenever it happens.
Mr. Asthana, good morning. Thank you for joining us. Commodity prices have come down, but are they likely to remain low? Because no large supply is getting added. This could be pure, this could be pure function of what is happening in the commodity market in terms of adjustment. What is your sense? The drop in oil, is that here to stay?
So this is supply was never an issue. There were the problems of how the supply side was connecting to the demand side, and I think that part, as it is easing, we see definitely that the trend is here to pretty much stay. I think the only issue what we have to watch out is for the US weather right now, and if that stays on course, which it seems it would, then I would expect that the prices would remain benign, and I think it's beneficial both for the companies as well as for the consumers.
So taking forward that point, Mr. Asthana, when you're saying it's beneficial for the consumers, can I ask you, by when will the consumers start benefiting?
So consumers have been benefiting nearly for several weeks now. I think in last 2 months, if you see, the prices have dropped at consumer level anywhere between 20 to 30 rupees a litre for the oil. And I think since there's a lot of mechanism that works on a pass-through basis, so that's a huge benefit. I think both on the fight towards inflation as well as the benefit, in terms of the overall expense basket, that continues to be there. And we expect that the situation will remain pretty much similar in the coming weeks.
Mr. Mallick, the expectation is that in the second half of this year is when we're going to see a pickup in volumes. Now, the fact is there has been rural degrowth for the last 2 quarters. Has that started to change?
This question is directed to me.
Yes.
The demand generally contracts during April, May, June because of the peak summer. And this year we had a very strong heat waves, particularly May and first part of June. So that has subsided. Consumption starts picking up from June 15th onwards. This year, the monsoon has been little erratic in the mid now, but we now see the consumption going up. Second half is very interesting always because edible oil consumption is always more in the second half. But important is the technical period now between July and September. As Asthana says, the condition in India, China, and US will be very important to watch. If everything goes well, then we see a very good production, consumption, as well as stable prices.
Interesting to hear that. Mr. Asthana, if I could, just probe you a little bit further. The market seems to be consolidating when it comes to edible oil business right now. You currently have a market share of around 8% or so. Just wanted to understand, what is the market share gain that you anticipate when it comes to edible oil? I know I'm deviating from the softness in prices, but just wanted to understand this.
No, I think, two drivers have, been critical in the marketplace for last 2 years. I think the smaller players have tended to struggle on account of, the larger working capital, what they required. The market volatility kind of, checked all the smaller players on the risk management capacity, what they had. So to that extent, the market is on a growth mode in any case, between 3 to 4% year on year. And I think it's certainly beneficial for the larger players, clearly, because their capacity to deploy more working capital, have superior risk management, have better brands in place, and the distribution capability. So I would expect that we'll not only continue to grow, but we should grow better than what the market trends are. And that's what we've been working towards as well.
Sure. Mr. Mallick, how is it that you're looking to expand your portfolio? Because, you also acquired the brand rights for Kohinoor Basmati rice. Just wanted to understand what you plan to do with this particular brand, and where is it that you see expansion coming in your product portfolio? Mr. Mallick? Okay, we seem to have snapped that line right now. We'll just get back to Mr. Mallick in just a second. But Mr. Asthana, I'm sure the street is curious to know as to what is happening to the performance of the non-oil business as well. Considering that currently 98% of your revenues are coming in from oil, and it's a meager 2% from the non-oil business. But how about expanding that capacity too?
So just to small correction,
Sure.
That our edible oil revenues are just about 80% plus. The balance 20% comes from the non-edible oil portfolio, which is a very large, foods portfolio that we have in the biscuits and confectionery, breakfast cereals, etc. Likewise, our Nutella brand is a very strong brand that we have. We have got atta and honey, etc. So that's 20%. That is nearly growing at 15% year on year. We are in the process of acquiring Patanjali's food business as well, which is nearly 4,000 crores. And just subject to, a couple of approvals, etc., which is awaited. That should happen very soon as well. So the whole idea is that, the edible oil will continue to grow at a particular pace. And, along with the secular growth in the country, as well as what we put forward, the foods portfolio, we expect to grow at anywhere between 15 to 20% year on year. And that's a big focus of the company that we're going to have. I think second quarter onwards, pace is going to pick up only.
Mr. Asthana, so what is the right way of understanding the demand scenario? And I'm talking about the global demand supply scenario, because that is the moving part. While here we can talk about a 5% uptake, maybe more sales around Diwali, less sales closer to Dussehra, that's all subjective. But ultimately, it is the global trend which would determine where prices are headed. What is your understanding as to where the big picture is?
Yeah, so the big picture is very clearly defined. I think, look, a couple of things I would like to elaborate on this point. One is that there has been a broader demand destruction globally, okay, on account of a few factors which have had an impact. One is that clearly the biodiesel mandates in European Union are being questioned, and I think they will get diluted. So which means the edible oil will go less and less into the biodiesel. Similarly, we are seeing the easing of sanctions on the food exports out of Russia. Already the US has declared, and on that side, we expect that the food movement out of Russia is going to significantly improve. Likewise, Ukraine as well has been quite positive in last couple of weeks. We are seeing movement of grains and oilseeds. Similarly, the South American weather, all that worries are behind us. So in general, overall, I'm expecting that, the supply demand scenario wise, I think supplies are all there. The big issues were in terms of not being able to logisticate that, not connecting efficiently to the destinations, which added a war premium on the commodities, especially the ag commodities. So net, the world is in pretty much in a good balance. I expect the prices to remain benign unless we have some major shocker on account of the weather. But that also does not seem to be a case in hand. So net on the ag commodity complex overall, whether we look at, grains, wheat and corn significantly, or we look at the oil seeds, net, it looks in balance. And I think the only two events which can now impact big time is the US weather and weather in India right now from a very Indian perspective.
Okay, I'm just going to put this graphic point out and I'm coming back to you, Mr. Mallick. I'm looking at wheat prices. Wheat prices, Mr. Mallick, have gone back to the pre-Russia-Ukraine war level. This has happened at a time when the total supply from Ukraine and Russia, at least the wheat supply, has got disrupted. So, Mr. Mallick, since Adani is also in the business of rice, wheat, atta, let me throw this question at you, that what is your view on the big picture of soft commodities?
See, as far as wheat is concerned, we knew that this year's production is going to be around 18% down because of the heat wave that was there in the first week, March. So the prices went up accordingly. And then the government opened up the export, so it went up. The moment it stopped, we have seen the prices now getting corrected. But I think wheat has always been a very stable commodity, unlike this year where it has had turbulence during the procurement season. Going forward, these are the rates which will continue and will grow slowly. Government does not have a great buffer stock as it always used to have. So we may not see open market selling this year. So it is the traders and the farmers who have the stocks will continue to decide the prices going forward, particularly after September, October. It is these people who will decide. That is what I think. As far as rice is concerned, India has always been a surplus country and India has been exporting. Of late, worldwide, the rice productions has not been so good and India has supported that by higher exports. We are also exporting quite a reasonable quantity of rice, both basmati and non-basmati. And we see the prices of basmati now stabling at these prices, but non-basmati, particularly IR64 and other lower varieties, Swarna, might go up by almost 10-15% because the Bangladesh now opening up for imports.
I'm just going to look at the basic big picture here, and the basic big picture here is that soft commodity prices have come down. This is coming down at a time when the war or the geopolitical tensions, they still continue. Now, the geopolitical tensions was the only reason why prices went higher, and it created a supply disruption. That supply disruption has not got arrested, that has not got addressed, yet commodity prices have come down. So it is a natural trend in the commodity prices which in a sense are impacting the underlying asset prices. Is my assessment right, Mr. Asthana, that look, on the supply side nothing has changed, no fresh capacities got added? If at all, the disruption in wheat, disruption in soy, disruption in maize still continues, yet basic commodity prices have gone back to, at least the three commodity prices which I mentioned, they've gone back to March lows or March levels. That's fantastic news.
Yeah, so I just a small correction to what you said. The supplies were always there. Whether we look at barring the South American crop destruction of soya, the supplies were there. I think the big premium that got added over last 6 months, and of course the longer term sort of duration, was on account of certain events that kind of had an immediate impact. And Russia-Ukraine for the wheat, the grains complex was huge. Likewise for the edible oils was huge. And I think the moment that part of the logistics and, the world realized that the food inflation is too much, and the impact what it started to have, with the series of government actions that started coming in, that has had an impact on softening of the prices. So supplies were there. The connecting it to the demand side with ease was not happening. That was one impact. And the other issue I'd like to bring in here is that, the whole complex of edible oils and commodities is very closely linked to the, the funds exiting the commodity complex, especially with the Fed, increasing the interest rates, and the speculators and the funds exiting the commodities partially in the US. I think that has had a very big impact in terms of the softening of the commodity prices. And if this continues in the same vein, I'm expecting, which I mentioned earlier also, that the commodity complex should remain on the softer side in the balanced part of the year.
Gentlemen, great to have you both on the show today, Mr. Mallick, Mr. Asthana, and thank you so much for giving us a 360-degree perspective really on this, soft commodity softness that one has seen, and more importantly, what's the visibility now going forward. Good to have you both on the show.
Thank you.
Thank you.